I'm going to show you what numbers to start making more profits next week. And I'm going to show you how to use those numbers for better decisions. So you stop using your feelings and your guts and your guessing and all that stuff that you don't have a clue on really what you should do next. The numbers don't lie, but they will expose you in everything you're doing wrong. Once you understand these numbers, making decisions gets easy and growth, well, it becomes predictable. I'm going to show you the three biggest mistakes that are hiding in plain sight that the numbers will show you that you need to fix immediately. Number one, are your salespeople really any good? Do you really know, or do you just think they're good? I'm going to show you how to expose if they are good. Number two, why are you cutting your marketing when you're slow? That's when you should pump it up. We'll see what the numbers say. And number three, not knowing the easiest, it says how not knowing the easiest number can make you lose so much money. Thanks for watching my videos and stuff. So if you like everything that you've been watching and you like this video so far and you're going to learn how to do your numbers, go ahead, hit the subscribe button. The more videos I put out, the more I can help, the more people that subscribe, the better YouTube will start doing it. So hit that subscribe button. I really appreciate it. I'll let you back to the show. All right. Success isn't a mystery. It's math. And I'm about to show you the equation. So here you go. Here's the number cycle. Measure what matters, fix what's broken, scale with clarity. So this whole thing is something that I designed. It is the numbers circle. So it doesn't matter where you start. Obviously, production is the big thing to make cash flow and to profit. But all of these work in tandem with each other as a circle. But you can start tracking your leads, start tracking your sales. The main thing is start tracking something. But today, I'm going to show you some easy stuff to start tracking right now. So what is the number circle? The circle has categories of tracking all the leads, the cash flow, and profit. So, well, I said that wrong. Let's say that. The circle has categories of tracking that all lead to the cash flow and profits of the business. So what is it not? It's not accounting, it's not QuickBooks, and it's not bank reports. My agenda today here is explain the circle per part, how to get the number, give real business scenarios on why you should know your numbers, and show you my weekly report and my service business. So here we go. The circle is a wheel that has no end. So what that means is if you can literally start at client retention, why you start keeping numbers on that, like how many clients you did this year that you serviced last year. I mean, it's an easy number, right? Do you know it though? So all these things here are what we're going to be going through. And so I use the circle because tracking can start anywhere. Just start. So here we go. Production. Production is the measurable output of work completed over a specific time that produces revenue. That's what you have to realize here, that it produces revenue. Add it up every day to get a weekly total as it's entered into the calendar. So what does that mean? You literally open your CRM, your scheduler, and you literally open the jobs and you count the money every week. And as it's coming in, as a job gets approved, it gets scheduled, add it down, have a spreadsheet, have something that's tracking it. Now, I don't trust CRMs. They don't put out the right numbers. So I strongly suggest you start to do this to teach somebody else. And we'll be getting into that here in a little bit. So what's labor? Labor as a service business refers to a human effort required to deliver your service, right? It includes both direct labor, hands-on work that creates billable value, and indirect labor, your back end, right? Okay, same thing with sales and labor. So labor, you're gonna, whatever you pay out is what you're gonna track and put a number down. So that's as simple as going to your payroll thing and seeing what the total payroll is for the week. I mean, that's literally how you track payroll. Fixed bills. They're predictable expenses that your business must pay regularly, no matter what. Pull a blank. So here's how you do it. You pull a bank statement, literally last month. Add it all up. Is it fixed? And we'll get to the next one. Or is it variable? Fixed, your rent, your software subscriptions, insurance, internet, truck payments, marketing agencies, just whatever, right? These are your fixed. You should know. You don't have to memorize that number, but you need it on a report because I'm going to show you here in a little bit. All right, variable bills. These are obviously uh, variable expenses that cost to go up or down depending on how much work your business does. They are directly tied to production, jobs completed, or revenue generated. Same thing. Pull the bank account and separate what's fixed and what's variable. You'll kind of get the hint of this. So job materials, dump fees, subs, your subs, equipment rental, fuel, credit card processing. These are all your variable bills every month. And so, I mean, especially gas, and stuff like that. Equipment rental, you may not need one this month. Next month you do. Next month you might need one for half the month. So all these are variable things. So these are numbers that I'm not saying this is not QuickBooks. This is not, you can get these numbers from there, but bank accounts are where I like to go to because if you go to QuickBooks, some things aren't entered. That's why I like this. So let's talk about fixed and variable. These are all the numbers combined into two categories. It's the 10,000 foot view of seeing your numbers. So when you get to know these two numbers, this is where you're going to start finding stuff out and why you track these numbers. If you know these, you'll find out and figure out something's wrong immediately. I mean, I'll tell you how. So here's a story that I have. So if you know your normal sales month and your variable number is extremely low, you might have forgotten to pay something big like payroll taxes. I know. Why? Because in 2019, we had a surplus of money in the beginning of the year in January, and we're like, what happened? Why do we have this money? And we literally couldn't figure it out. We literally had made an extra like 25K in that January. So we're like, cool. Middle of late February, it didn't even take them that long. It was literally 3 weeks later. Literally, I get a call from my mom, my mother, who worked in the call center and ran it. And she calls me up and says, Chad, I need you to come down to the office. I'm like, I don't want to. I'm busy. I'm doing something else. She goes, well, the IRS is here. They need to talk to you right now. So got in my Jeep at the time and went down there and come to find out, we didn't pay January's payroll taxes. So that's where the 25 extra K was. And long story short is what happened was our bank, which did our payroll for us, we used a bank that had payroll. It was Bank of America, I'll just tell you. And what happened, we had a name change. Now, we didn't change. It was just a name change in the back of our books. And the public name, it was a variation of what we were using. And so all the checks are being written in the new name. So the bank wanted a new payroll account that said that same name. No big deal. So they canceled, stopped using the old account December 31st and started using the new account. Well, when payroll is put in, that what they didn't tell us is that when we put it in, it was not going to take out any taxes because the way it does it is it goes off of your averages and things like that. I don't even get it. But they didn't take any payrolls. So taxes didn't start getting taken out of their checks until February. Or they got taken out of their checks, but they didn't get saved from us. So we were only told what to pay. We paid that amount, done, no taxes saved to pay the government. So we knew something was up. So we had this heightened thing. We were searching. We didn't. That was in the middle of our busy season. So it was like, I guess we just made 25K more. Boom. But we figured it. We knew it, and it was obviously something that we started to make sure my bookkeeper made sure he got it right. My CFO. So anyway, marketing. It's the entire strategy of attraction, convert, and retaining customers. While advertising is just one tactic, marketing is the whole enchilada. So that's, you got to look at this. In short, marketing is the whole game. Advertising is one task, one play, one thing. So trade show. So what goes in your marketing numbers? Like trade shows, flyers, emails, websites, reviews, referrals. This is something you would track in the marketing department. And then we get to advertising. It's, as you know, it's the act of paying to promote your message, your offer, your brand to a target audience with the goal of generating leads or sales. Think of it like this: marketing is the full plan, advertising is the billboard, the ad, the post that people see. Running, examples are Facebook, Google ads, mailers. I don't have to tell you what this is, but you want to track these, and they're different. They're different numbers, and so okay, let's get to client retention. This is easy. So you're going to start tracking some numbers. Retention is recurring revenue without reoccurring ad spend. So this is like the freebie money you make, leads that you get. Retention rate, you want to know that. You want to know customer life value, CLV, your churn rate, repeat job rate. These are starting to get into the numbers that you're starting to know will help you make decisions, which we'll be getting into here in a minute. So leads, potential customers who have shown interest in your service or product that have provided enough information for you to follow up. The numbers. CPL, cost per lead. You want to know your conversion rate, your source numbers. And the source numbers are this. Where did you get the lead from? Google, Facebook, referrals, Yelp, trucks. Someone saw the truck and called. That is what you want. You want to track that because it's going to become very important when you start spending your money, especially when you're slow or when you're busy, of what to turn up, turn down, turn off, whatever. All right. Sales, converting interest into revenue. It's where the conversion turns into commitment and the money changes hands. So what do we track? Well, we track your individual salesman's numbers, the location, maybe where the sales came from, your team, combine everybody. If you have separate cities, you want to know what the team is, the total sales, your sales per opportunity, which that's a good one. I'll explain that. Sales per opportunity. That is every appointment, every opportunity they win on that has a chance of collecting money or be sold is counted. So it's not your average ticket where you just take the numbers of the ones you sold and divided by the money. No, this is your total opportunity. So if you went to 15 appointments this week, you sold one, that's going to be a really low, let's say 10-1. You're going to have a 10% sales per opportunity, or let's say it's dollars divided by opportunity. So if you had 10 opportunities and you sold $1,000, you have $100 for your sales or your sales per opportunity. That's a number to track because it's going to show you the longevity of how guys are doing with their leads and stuff like that. So obviously closing percentage and average ticket. All right. So I got a mock up here. It's our control business. It's the weekly report of just some numbers that I'm totally made this up. This isn't my business. But we're going to go through this and I'm going to show you how this all works. So I'm going to run this down. So we're going to say production for that week was 17,256. This is at the end of the week. Let's just say this is on Saturday night. This was made, and we're reviewing it on Monday morning. Okay, so your productions was 17, your sales was 21, your variable bills, labor and advertising, OT, okay, fixed bills, how many leads you got for the week and where they came from. Okay, we're going to go over to your trucks. Now, these are your sales guys. This is how much they sold, how many opportunities they had sold, 6%. They did a 40% close. If they did 6, that's 40% close ratio. Average ticket, 1605. SPO, 642. And we can go all through all this. See these? Now truck number 2, 55126, 10, blah, blah, blah. So you see all this. So we're going to use this now. So, okay. So as you see here, as we go through the numbers like we did, so the production, 17,256, bills are 16,541. So there's our profit. So okay week, it's not terrible, but here's where we really want to start looking at some stuff here. So let's look at our trucks. So this first truck does $9,600. His closing ratio is 40%. Now I'm not judging anyone, and I don't know what niche you're in here, but 40% in some industries is good. Some of that is horrendous. So we're not going to judge that because we're going to go off of what everybody else is doing as we start seeing. And you're going to want to know what the industry niches averages are. So you don't know. You want to find out. And hopefully you're going to find out that you're above or a minimum at. So anyway, we're going to use this one right here. So as you see here, he's got a 40% close ratio. His average ticket 1605 and his sales per opportunity is 642. So that's, you take the 9632 divided by 15 and that gets the 642. And then to get the average ticket, you take 96 divided by 6. That's your 1605. So Let's go to truck number 2. Way bigger closing ratio. Sold 10 out of 15, less at 51.26, average ticket at 513, like literally like a third of what the other guy is, and his SPO is 341. Okay, let's look at the next guy. He sold 68.41. He only went on 6 opportunities, sold 2, 33% closing ratio. Average tickets half of that, 32, but his SPO is 1140. So what do I show? What do these numbers tell us? So which is the guy that you'd rather have? And so it just, you kind of look at this. It's like, okay, so this guy and this guy, he's got a 30% closure ratio. Well, he went on 6 appointments, but he had a high closing ratio for 6 appointments because his average ticket's 34. Yet this guy goes out and sells, literally 3 times as much as him and does 1654. So, I mean, obviously, this guy is the guy we like. He's our horse. We look at, but we don't really know what happened this guy's week. Did he call in sick a couple of days? Does he do whatever? Let's just say they're all equal, and for whatever reason, this is what this guy has. So we like this guy's numbers better. But let's take him out of the mix. Let's just deal with these 2 guys. All right. So now we look at these. They both did 15 jobs. This guy has a higher closing ratio, and this guy has, and this guy has a lower closing ratio at 6. But he sold 6, but he sold more, so he got more. So here's the question. These are some things that'll tell you. Let's start with this guy. His pricing is too low. More than likely, you'd be looking at his pricing. Why are you selling so much and only selling this much? Because he's probably too low, and he needs training. He just needs training. Now, this is your horse here because he did sell 9,600 with the 15 opportunities. So this guy at 40% closing ratio in the chimney industry, that's actually the niche. That's the niche average. 40% is a good average to have. There's some people that are higher, and there's a lot of people lower, but 40 is the goal in the chimney industry. So I don't know if you're a window washer, electrician, a plumber. What is your goal to close? Like if you're a plumber, you're probably on the 90% closing ratio or even higher, because you're showing up to a problem that they need fixed right now. If you're a window washer, you might already have that pre-sold on the phone, you upsell. So you have something, you're almost 80, 90% or even 95% on that. But then let's get you into things like an electrician. Let's just say lights aren't off, but you got a bigger project and stuff. So you want to start tracking what your sales guys are doing and blah blah blah, right? So as your landscapers, like you go out and sell landscaping. So there's one that gets shop crown. So if this is landscaping, which of course these numbers are way off for landscaping, because 1 yard is $9,000 to $10,000 to do a lot of times. But let's just say here, if this is landscaping, so 40% close is probably pretty good in a landscaping business. Now, what I'd like to see here is that number really what we want to be doing? And that average ticket is way low. So you start seeing what the numbers can really do for you here when you start evaluating your trucks. So you start seeing that this guy's pricing training, if this is the standard. Now let's take this scenario. What if they're all low? What if the average niche price truck sales is $15K? Let's say the closing ratio is 45%. Average ticket is, let's go 3,800. And your average SPO is, let's say, 1,500. So what do these tell us here? So all of them are getting killed with the sales. Okay, 45%. This guy's close. This guy's over, he's too low. This guy is right on. Yeah, make a little smiley face. Uh, Bad smiley face, but okay. Uh, he's okay with his average ticket. Now SPO, this guy's SPO. Everyone's SPO is getting killed. So now we got to know, what are we going to do here? Well, number one, we got to get sales training, and that's going to solve all of this. And what you're going to do here is you're going to create, I would suggest, is you're going to create a sales process and then a presentation. This pen sucks. It's too loud. It's too thick on this app. So anyway, that's what you start doing to fix this stuff. That's that. Okay. Now let's go over here and let's look at some variable bill stuff. So right here, you start looking at stuff, and here's where you start looking at if you had another month. This is where you start going. So if 1 month, let's say your sales in a month stayed the same. Let's say a new month, and that was, let's just say 18K. All right, or your I'm talking sales, so it's a little lower. Let's change that back. I was looking at production. Okay, so production or sales was 21K. All right, now you start looking at this. All these should be the same, right? If you had a 21K month, and all of a sudden you see that your variable bills and your OT went up to 4K. You're gonna be like, what happened? Why are we at 4K? What is that? Because I mean, really, and let's just say, this is higher. Now our profit, what would happen here if that was 4K and this is it? Now you're going to take 4K minus that. Your bills are now going to be 21K, which makes you lose 3K. That's a deficit. So now 3K. So now you got to know what happened. So when you start, so you're going to see this number first, and then you're going to go looking, and that's where you start finding, well, okay, 4K, and then you start looking to see what happened, and then is that a training? What kind of training issue is that going to be, and all that? So this is how you use the numbers. This is where you're at. So another scenario here is, let's talk about the leads. Let's talk about marketing. Okay, so all right, marketing. So as you see here, we got 29 leads, and Google was 16, right? And we had 9 organic, or excuse me, 9 paid, and 7 came from organic. And you look at everything else. Okay, so what you start looking at, and for Google, you paid 2,100. Okay, I'm just gonna round these off. Facebook, so this is the G. Facebook was 524. Okay, but you only got 6. Yelp, you got 2 at 300. So you start looking at this. Okay, so if this is how many you got, and this is what your cost is, your full cost for marketing was, let's see, your 21. I have it up there. Advertised was $29.78. Okay, if this is what it took you to make those sales, then if Google is bringing you 16, and you spent whatever you spent, $2,154 on Google, why would you not, if you know you could spend more on Google to get another, let's just say 10 leads, maybe you could up your Google by $1,000, and then you find out, does that give you the same ratio of possibly making 26 leads? And then does that make your sales go up to, let's just say, 31? That's where you start tracking and knowing, where you can start getting smart. And maybe you start looking at this as maybe your um, maybe your Yelp that you got 2 leads for. Now you start getting smart here. Maybe now you start tracking, which we do, track how much money that week you made off those leads. And maybe your Yelp leads came in to, like, let's say 12K. So that was a 6K per. So it's like, oh, wait a minute, what are we doing with Yelp here? Which, by the way, I don't see that in Yelp in my ever in my life, but I'm just using it as an example. But yeah, Yelp now has just become the horse. We want to up Yelp's money, right? Because we want to get more than 12K off of just 2 clients. So this is what numbers start to show you. So guys, that is how you start using your numbers on easy things that will start showing you to make money now. Okay, so that's the numbers and how you can get to make more money now by tracking those sales and those production and starting to figure out how many leads you can do, and this is how you're going to do it. So if you want to come and work with me, I have a new group called Digits. So I'm looking for my first 15 founding members, and when I do, they're going to get some special rates and some special deals to become first. So here, right there, is the QR code to apply. I'm looking for the right guys. You need to be out of the truck or super close to being out of the truck or about to be out of the truck to be able to do this. So it doesn't matter if you're 800,000 or 2 million. We're really looking for the guys that are going to get shit done. GSD. We want to be able to train, help, and get you to get your numbers up and really start getting you to the freedom that you deserve through your numbers. And we're going to teach you mindset. We're going to teach you how to run a business. And so with my $4 or $5 million company that I haven't worked there in 11 years. And it's all, how did I do it? I started with the numbers.